Welcome to The Explainer. Today, we are diving deep into the Nepali stock market. Whether you're just a little curious, maybe a bit cautious, or you're totally ready to jump in, this is going to be your starting point for understanding how it all really works.
So let's get right into it with the one question that's on everyone's mind. Is the stock market some kind of magical tree that just grows money? Or is it more like a high-stakes game of chance? Well, the truth, as you're about to see, is actually somewhere right in the middle.
Before we even get to the how, we have to tackle the why. What is it that pulls people into the world of stocks and shares in the first place? Well, it's not just one thing, but it all starts with a very simple and very human goal.
Let's just be honest here. The number one reason, the primary objective for absolutely everyone who invests is to make a profit. It's that simple. People put their hard-earned money into the market because they expect that it's going to grow and give them a really nice return.
But, it's not just about getting richer. There's another really powerful reason to invest, and that's to protect the wealth you already have. Because believe it or not, there's a silent economic force out there that's constantly eating away at your savings.
And that force is called inflation. Honestly, the best way to think about it is like an invisible tax. It basically means that the 100 rupees you have in your wallet today, well, it won't be able to buy you the same amount of stuff next year. Its value is slowly but surely going down.
Let's make this super clear with an example that I think we can all get behind. Momo. Okay, so today, a plate of Momo costs you 100 rupees. But because of inflation, maybe next year that same plate costs 110, and the year after that, 120. See what's happening? Your original 100 rupees, if you just left it under your mattress, can't even buy you that plate of Momo anymore. It's lost its power.
And this is the part that really matters. On average, the inflation rate in Nepal is somewhere around 5% a year. So any money you have just sitting in a regular bank account is effectively losing 5% of its value every single year. That means your investments have to earn at least 5% just to break even, just to stand still.
Now, of course, there are plenty of other reasons people get into the market. It's actually pretty accessible. You can start small with 10,000 rupees or go big with crores. It's also highly liquid, which is a fancy way of saying you can turn your shares back into cash pretty quickly, usually in just a few days. And honestly, for a lot of people, it's just a way better alternative to a low-interest savings account or a really cool way to put all that business knowledge to a real-world test.
Okay, so we've covered the motivation. We get why people invest. Now let's talk about the true nature of the market itself. It really is a constant balancing act between two incredibly powerful forces, profit and risk.
And that brings us to what is maybe the most fundamental rule of the stock market. Return and risk are inseparable. I love this analogy. They're like an object and its shadow. Wherever one goes, the other one is right there with it. You just can't have one without the other. The potential for a bigger return always comes with a bigger risk, period.
And you can see this dance play out perfectly if you just look at the history of Nepal's own stock index, NEPSI. These numbers tell a story of massive mood swings. That peak in 2008, that was fueled by huge optimism after big political changes. And the all-time high in 2021? A massive surge of money flooding the economy. But look closely, every single one of those incredible peaks was followed by a pretty deep valley. That's just the natural rhythm of the market.
This utar chagav, this constant up and down movement, it isn't the bug in the system, it's a feature. It's what makes the market the market. Honestly, understanding that and really accepting it is the very first step to becoming a smart, level-headed investor. You learn not to get too giddy during the highs or too panicked during the lows.
I think this analogy just hits the nail on the head. Investing is a lot like riding a motorcycle on a busy highway. You know there's a risk, right? An accident could happen. But you don't stop riding. No. Instead, you wear a helmet, you stay focused, and you manage that risk. You prepare for it, but you keep moving forward.
So if you're out there managing all this risk and reward, what are you actually buying? It's a common mistake to think you're investing in some abstract idea called the market. But the reality is much, much more concrete than that.
See, the stock market itself is just the platform. It's the gateway. When you invest, you're walking through that gateway to buy a tiny little piece of ownership in a real, living, breathing business. You're buying shares in an actual company.
Okay. Now in Nepal, there are two main types of companies, and this difference is so important. You've got private limited companies, which are limited to a pretty small number of owners, and they can't offer their shares to people like you and me. But then you have public limited companies. They can have a ton of shareholders, and they're the only ones that can sell their shares to the general public.
So here's the key takeaway. Every single company you see listed on the stock exchange is a public limited company. But And this is a big but, it's not just any public company. It has to be one that's gone through a very specific process called an initial public offering, or IPO. That's basically the company's big debut, the very first time it offers its shares up for sale to everyone, which then allows it to be traded on the exchange.
So understanding these building blocks, the why we invest, the real nature of risk and reward, and what we're actually buying, that is the true foundation. Knowing all of this, the final question isn't just about whether you should invest. It's about how you'll prepare yourself to take that very first step on your own journey.